Alright guys, welcome back to another video of a trade that I took today on June 18th and another video of me showing you that I don't own any shirts, but this was taken on the NASDAQ and I'm going to break down everything as to how I kind of derived this execution because our higher time frames, as you can see here, has been just like consolidated dog shit. Like literally this range that we've been trading within on the higher time frames has been horrible. But I was still able to navigate and try to capitalize on something. Today was FOMC, and that was in the PM. I took the trade in the AM session. It was a very nice and smooth execution, I cannot lie. And I'm surprised as to how smooth we actually moved based off of our news events that we had during the day. So starting off, daily chart, there was really no read here. And if we're framing anything as of right now, we have been trading within the candles range from Monday the 16th. And as you can see here, we've been stuck between this. But I want you guys to also notice one thing here. If we compare and see how we're trading within this daily candles range on all three assets, there's one thing that is different here. And I think that you guys can already see it. The difference here is the SMT at these daily lows between the Dow, the NASDAQ, and the YM. So I was already like leaning towards longs in this week because we had the run of previous weekly low on the NASDAQ, we had run of previous weekly low on the Dow Jones, and we had the failure to do so on the NASDAQ and the S&P 500. So let's drop down to like our lower time frames. We're going to go to an hourly chart just to frame as to what price looked like going into this trading day for pre-FOMC. All right, so here's our hourly chart, and our primary focus is going to be on the chart on the left. This is our NASDAQ, this is the S&P, this is the Dow Jones. Now, look very closely as to what is going on here. I'm also going to draw a vertical line at 9 o'clock. This is where equities open comes to play, and that's where I'm looking for a majority of my trades. I'm always kind of waiting for equities open to come in. It's either going to give me a distribution higher or it's going to provide me a Judas swing lower to clear some resting liquidity, show me that there's going to be manipulation in the market, engineering more stops to then give us a clear move after that. So if I'm looking at this right now, what do I kind of see between these three? So between these three pairs, I see that there was an SMT set in here between the NASDAQ, the S&P 500, and the Dow Jones. But what was there also on top of all of this? If we look even closer, there was a new day opening gap right here. This new day opening gap, if you guys don't already know this, these are not utilized as like internal range liquidity pools. They're more so utilized as like zones of support or resistance. If we trade back into them and price respects them via the bodies, you would anticipate price to utilize this area as support. Price can tag it, take out an external range high, and then still come back into it again, but still utilize that area as support. I'm not framing my trades based off of this. I'm just using it as like extra confluence to see like how is price reacting and why is it reacting in this area. So I'm going to go down to a 5-minute chart because we're going to monitor and see what happens on price when we get to that 9:30 equities open. So let's go to the 5-minute chart just to see what is happening next. So here's our 5-minute chart, and the next 5-minute candle will be when equities open comes into play. So at this point, I'm waiting. I want to see what's going to happen at equities open. Are we just going to skyrocket higher from our SMT that is set in resting down below here? Or are we going to manipulate, come back down lower to then provide us a Judas swing for then an area of opportunity to then capitalize on? Another thing that I did see and notice for this day and our potential drawn liquidity as what we could be reaching, London high was still intact on all three assets. So I marked off all three of the London highs for a draw on liquidity if we're able to look for a trade today in this AM session. Let's see what happens at the 9:30 equities open to see what could we do next. So, boom. Look at the reaction as to what happens at equities open. What do? We create another SMT set in right at equities open. This is very important to pay attention to because notice how this specific candle at a key time is engineering and clearing liquidity in a key level. The new day opening gap, and if I go to the 1 hour chart, this hourly candle runs an external range low here. So we create an external range run, and if you guys don't already know this, in my forever model and my ratings guide, a B and B plus setup, a B setup is listed here. We have a run of an external range low, creating a lower low. So we're looking to long the weaker pair. So we're looking at the reaction as to what happens when price runs that 1 hour external range low that creates SMT. We're monitoring the 5-minute chart to see if we get that displacement reaction to then take a trade to go long. And in this situation, when we created that SMT, as you can see here, we have a lower low on the Dow here. We have a higher low now set in. So we have 2 stages of SMT. We had an SMT on that hourly. Now we have an SMT on the lower time frame on the 5-minute from that hourly external range low run. Now I'm literally waiting and sitting on my hands for the market to then offer me an area of opportunity to get in. And you guys already know this. And what I do next, I wait for the specific candle that clears resting liquidity. We cleared short-term low here, cleared short-term low here. By what? By this specific down close candle. So when price closes above that down close candle that ran all those short-term lows, that would be an order block and a change in state of delivery that I would utilize as a long entry for then us to target London highs up here. That is what I'm waiting on. That is what I'm waiting to do for me to lay on risk into the marketplace. So in this situation, we need to see price do this exactly. We need to energetically displace higher, then retrace back into that opening price of that candle that cleared all of the liquidity, and then target London highs just like that. And I'm doing this all live to the community. I'm annotating it. I'm speaking it into existence. I need X, Y, and Z to do A, B, C. That is literally how you should always be operating in the markets. I need this to happen in order to do that. I'm creating a trading plan and I'm trading based off of that specific plan. Now let's see exactly what happens after we get this run of the low. We have a nice 5-minute candle here. We have a 5-minute bearish gap. Now what does this 5-minute bearish gap do? I want this gap to be violated. So I want price to trade right through this, not utilizing it as a bearish gap, but create an inversion fair value gap. So what I'm doing next is I'm waiting still, and boom. What do we do next? We close above that down close candle that runs a short-term low. We also inverse that bearish fair value gap. So what I'm doing next is I'm telling my Discord that I'm going live here, or I'm going long here at this down close candle. But this is a pretty big order block. So this order block is measured at like damn near 66 points. I'm not putting my stop all the way there. I put my stop at the short-term low here that got ran. And then I'm targeting London highs all the way up here for like a 1.8 to 1 risk to reward. So this was my execution and what it exactly looked like when I was taking it live. So this is all I need for price to give me my execution long is us to retrace into that opening price. Stop loss goes at the short-term low that got ran and target the London highs resting right there. As you can see, the next candle doesn't give us a tag in yet. Neither does this one. 10 o'clock comes in. Open, low, high, close. We come down, create our 4-hour manipulation wick. Then we are exploding higher We run the highs that we set in here at 7:45. At this point is when I told my Discord that I'm reducing my risk and I'm dropping my risk to the short-term low or the swing low that is about to be created on that 5-minute candle. And then what I also said was when ES, or the correlated asset here, runs the highs from London, I'm going to go break even. So we play out price even more. Sees what happens next. As you can see, we run the highs on the S&P 500. So at that point, completely risk-free on that trade. So I'm letting price do its thing with no harm, no foul, even if we come back lower and it stops me out. And as you can see here, price then proceeds to expand and smooth runs to my take profit from my M5 bullish order block. I have a very small amount of things that I need to get into a trade, and this is exactly what I saw and how I executed today. Every single trade that I'm taking, they all mimic and they compare to the previous. A very simple process and approach to price delivery. Now I'm going to get more into the in-depth talk of SMT and how I'm incorporating it now, especially being more specific, looking for these 2 stages of SMT for executions from a higher time frame SMT to a lower time frame SMT, because I'm just keeping myself in alignment to look for where are the protected lows, where are the protected highs, and where should price not go after I get in. But I hope you guys enjoy the video. Very simplistic process. If you want to trade with me live and watch me take all my executions in front of you, I'm going to have a link in the description of this video. And if you also have more struggles beyond that, I have an accountability factor that is also in the description. So you can click the link and try and join that too. But I hope you guys all have a great rest of your trading week. Be safe. Don't do anything stupid. Have any questions, any recommendations, drop them in the comments. I'm reading everything. I respond to everyone. But be safe, y'all, and I'll see you guys for the next upload.